So people are always talking about investing in dividends, but I'll bet you had no clue there's another product that pays dividends. This isn't another IUL video, folks. This is something called participating whole life insurance. Now, it pays a dividend to the policy owner, usually in the form of what's called reduced paid up insurance. So that means it'll take the dividend, let's use $1,000, and buy that much worth of permanent insurance, which still builds cash value on the person. Now, there's a few companies that do this, and the dividend rates can vary significantly, but based on current 2025 rates, MassMutual leads the pack with the highest dividend rate at 6.4%, followed by New York Life at 6.2%, Penn Mutual at 6%, and Guardian at 6.1%. On the flip side, Northwestern Mutual currently has one of the lowest rates among major carriers at 5.5%. with smaller companies like Ohio National historically offering rates at about 4%. Now, these policies are important because they're what's traditionally used for that whole infinite banking concept that everybody's talking about online. So the dividends essentially allow your policy to grow faster than the base guaranteed rate. Now, the other thing you'll often hear is buy term, invest the rest. And the reason why is because of the belief that people shouldn't be paying for something in perpetuity. Ironically enough, I happen to agree with that part of the philosophy. But now here's what most people don't know. You don't have to pay for whole life insurance for your whole life. There are ways to structure it so that you can do the same thing as term life insurance. You can pay for a specific number of years, let's say 20 years, and then stop. But in this case, you'd still have a life insurance policy and it would continue to grow even though you're no longer paying any premiums. Now, this is called a paid up policy structure. The key is working with someone who understands how to design these policies the right way. Paid up additions, riders, and proper premium scheduling. You're essentially front-loading the policy so it becomes self-sustaining. Now, MassMutual, with their 6.4% dividend rate and 15-year historical average of 7.14%, has consistently outperformed other carriers in this space. Their dividends have been paid continuously since 1869, giving you the confidence in the long-term performance. Now, the beauty of this approach is you get the best of both worlds. You stop paying premiums after your chosen time frame, but unlike term insurance that expires worthless, your whole life policy continues building cash value through those dividends for the rest of your life. So, folks, if you want to learn more about how these dividend-paying policies work and how to structure them to stop paying premiums after 20 years or less, text the word dividend to 203-936-7050. I'll get with you and we can work with some of those top performing companies and design your policy the right way. Salute and wipe ass. Work in progress every day and see success.